Alrighty, beautiful people. In today's video, I'm going to teach you guys exactly how to become a profitable day trader in 2025. Now, a couple things I want to tell you guys before we jump into this video. Number one, a lot of you guys probably think in your head, hey Salman, do I need to be a smart guy or don't I need a lot of starting capital to start day trading? Both are wrong. You don't need either of those. My name is Salman. I've been day trading for roughly 8 years and I've been teaching people how to become profitable day traders for roughly the last 6.5 months. My Discord is at a total of $2 million in payouts from students and student success. So I know a thing or two, and I've gotten all these people to profitability, and what I can tell you is they have nothing different than you. They started with no money in their bank account or barely little to none, couple $100. They're not smart. Some of them have screws loose. Some of my Discord members sit there and just say 6, 7 all day. So there's a bunch of things that I want to cover in this video. I'm going to give you guys my strategy. I'm going to give you guys psychology, how to think. I'm going to give you guys niche scenarios because I know you guys will have a ton of questions. And it's going to be a long one, and this video is going to be a long video, but what I can tell you is if you can make it to the end of this video and you can take journaled notes throughout this entire video and actually lock in on this video, you have the possibility to change your life and change the entire trajectory of your life. So I'm going to give you guys everything you need to know. A lot of you guys are probably asking right now, how much money do I need to start day trading with? And this is an important question, obviously. And the nice part is there's funded accounts out there now. And if you don't know what a funded account is, it's basically a company that gives you money to trade with. And you have no risk, there's no liability involved. If you lose the money, it's completely okay. Now, the structure of how this works is basically they give you a evaluation account. So what that means is they want to basically just assess if you're able to move on to an actual account that will make you money. So the cost of this is typically, it depends on which firm it is, but for majority, the evaluation cost is $50, right? So you pay the $50 to the firm, and if you pass that account, and once it is passed, then from there you pay an activation fee of $150 to then be able to actually start making money on that account. So there's a bunch of different companies. I would say the most simplistic one is Top Step or Take Profit Trader. Those are the two most suggested out of the ones that I suggest to the people that learn from me, my Discord students, all that good stuff. And the only reason why that is because there's a bunch of different features that they have that the vast majority of other firms don't have, which is really nice. So for example, Take Profit Trader has same day payouts. So if you make money and you make, let's say, $1,000 on that account, you can then withdraw that $1,000 in the same day. And basically the payout rules and all the different rules are different depending on which firm you go with. But don't worry at all whatsoever. I'm going to actually on my computer go down and break down each rule with each firm to show you guys which ones you should have or which ones you want to have, basically preference wise, because it's really just a preference. And literally, guys, I'm telling you, you probably think in your head right now the same way that I thought when I was just starting out in day trading. Oh, well, I'm not good enough, or I'm not smart enough, or the people who day trade had an advantage over me. And I'm telling you guys, literally, I've gotten so many people to consistent 5, 10, 15, 20K months. And some of them are the dumbest people that you'll ever meet in your life that are just normal human beings. They brain rot, they scroll TikTok, they do everything normal, right? Like they had no advantage over you. Now that we got all that stuff out of the way, I'm gonna jump on my computer and show you guys exactly how to start day trading and everything you really need to know. All right, so we're on the charts now. I'm gonna teach you guys strategy-wise everything you need to know and like a very strong baseline fundamental. Now, one thing I'll tell you guys is you need to pay for a TradingView subscription. There's no really way around this. It's like the one subscription that's kind of mandatory that you need in trading because your charting is everything. You know what I mean? So don't be cheapskate when it comes to this and don't be stingy. So what you want to do is go to tradingview.com. And because I have the plan, it's not going to pop up. But somewhere on the screen, it should say upgrade. There's also this area where you could just go to the top right, sign in, and then you just click on your account. And you want to purchase the essential subscription. So purchase the essential subscription. I believe it's like 20 or 30 bucks a month. With the essential subscription, you want to get real-time data. So what this basically means and what this does is if you don't have the real-time data, the charts are going to be 15 minutes behind or 5 minutes behind. So we need real-time data because we're going to be executing real-time, right? This is important and we obviously need it. Now, don't worry, you might be confused on how to even get there and where is that even prompted. I'm going to just link a bunch of YouTube videos in the description for every single thing that I mentioned in this video. So for example, for real-time data, I'll link a YouTube video on how to get real-time data and anything that I talk about in this video. So we have the charting platform and we're on TradingView now. So you're going to want to go to the top left, right? NQ, you're going to search up NQ because this is what we're going to be trading. We're going to be trading NQ, which is the futures market. So it's basically a contract that we will be trading. And the way that you calculate everything in terms of like, okay, well, how do I know how much money I'm putting in and all that good stuff? We'll get to that, so don't worry. So you go to NQ, right? And at the bottom, right, you're not going to want to click NQ1. You're going to want to do NQU. So these contracts expire. So what that means is basically after a certain amount of time, the contract you're trading expires and a new one gets created. So the ticker is going to be, or the symbol that we search up, so NQU, this will change every time we expire. So right now, up until September 2025, we will have NQU. The next one will probably be NQZ or something along those lines. Let's find it. Yeah, so the next one after in September when NQU expires, the next one will be NQZ. Now, the reason why we need to click these ones and not the NQ1 is because NQU and NQZ shows more accurate data because it's on an expiration basis. These things might sound like what the hell is this guy talking about right now? But I'm telling you, don't let it discourage you, bro. It sounds confusing right now, but in literally the span of a week or two of you just applying yourself every day after this video, everything will make sense, right? So NQU, you pull up NQU. Now, what do these time frames mean, right? What does the 1 minute mean? What does the 2 minute, the 5 minute, the 15, yada, yada, yada. These time frames basically mean how long it takes for this candle to open and close. So on the 1 minute time frame, there's a new 1 minute candle every minute, right? So notice this little timer right here. It says 10 seconds. So in 10 seconds, a new candle is going to form on this chart. So 5, 4, 3, 2, 1. So notice how a new candle opened right there, right? So wait for it to move, wait for it to start moving. There's not a lot of volume or a lot of trades happening right now because it's overnight session and it's the Asian session. So it's the time the Asian stock market's open. So that's why these candles look funky as hell. But anyways, this is a new candle. There's just no volume in a candle. That's why it's not moving right now. But how the charts look during the normal times in which we're going to trade between 9:30 a.m. and 10:30 a.m. That's the optimal time. Now, what is this time called? If you guys want to write this down, it's called the New York AM session. The New York AM session is from 9:30 to roughly 12 o'clock. 12 o'clock is the lunch session, and what that means and what the meaning behind it is all the money that's getting moved in the market, all of the people that are moving the money in the market are basically going to lunch, right? So all the bankers in New York, they're going to their lunch break, and that's why it's divided into sessions. We want to be trading the New York AM session. So between 9:30 and 12 o'clock is essentially the New York session. The ideal times in which we want to trade is between 9:30 and 10:30. That's the pocket of window. So right here is 9:30 a.m. As you can see at the bottom of the screen right there, it says 9:30 a.m. And that is an EST. So New York time, 9:30 to 12 o'clock, right? Or sorry, to 9:30 to 10:30 is the times we want to trade, but the whole New York AM is around 9:30 to basically 12 o'clock, right? But like I mentioned, the times we only want to trade is between 9:30 and 10:30. So if you guys want to write that down somewhere, you guys have a journal or you have notes ready to go, for only times we will be trading is between 9:30 a.m. EST or New York time to 10:30, right? Now, what do we want to look for as a whole? All right, so I'm going to draw out some illustrations right now. So the main things in which we're looking for are draws on liquidity. Now, what does this mean? What does a draw on liquidity even mean? So a draw on liquidity is when price sets in a high or a low in a general range. So for example, let's say we come up, price consolidates in this area, and we set a high right here. We set in a high here and a low here. So these are now draws on liquidity, right? This is a draw on liquidity, and this is a draw on liquidity. Now, ideally, we're looking for one or two scenarios to play out off of these draws on liquidity. We're either looking for a continuation or we're looking for a reversal. That's the only two ways in which we know the market moves. So for example, this is a high that we've set in with this high, right? And this is a low that we set in from this low. So we're only looking for one or two scenarios to play out at these highs and lows. Either we continue off of this low or we reverse off this low, which would look like something like this. So we come to the draw on liquidity, we either continue or we reverse and go to the next draw on liquidity. And at this draw on liquidity, it's the same thing. We either continue off this draw on liquidity or we reverse. Now we are just looking for one of the two scenarios to play out, and we are just looking at basically, we're just waiting up until one of them happen, and then we just react off of it. So, for example, today, right, let's map out our draws on liquidity. So we would go on the 15-minute time frame. And the reason why we go on a higher time frame is because of the fact that the draws on liquidity on a 15-minute, 30-minute, and 1 hour are much stronger than the draws on liquidity on the lower time frame. So, for example, what this looks like. Well, as we notice here, there's a draw on liquidity because there's this high here. So, for example, if I go into market open 9:30, right? This is market open price action. So this candle here, I need to wait for the next candle to open. There's the 9:30 candle. So there's a draw on liquidity here, and there's also a draw on liquidity here. These are the two draws on liquidity we are essentially looking at. Now let me go ahead and replay. Let's go to 9:30, right? There's the 9:30 candle. Let me move my big ass head out the way. 9:30, right? There's the candle. There's the draw on liquidity there, and there's the draw on liquidity there. Now we are basically just waiting for one of these to either reverse off of, right? So what that would look like is something like this, to then go short on the market. So when we go long on the market, that basically means we think the market's going to go up. When we go short on the market, that basically thinks we think price is going to go down. So in this case scenario, if we're thinking we're going to reverse off this draw on liquidity and we wait until it actually happens, then from there, we would go short on the market. We would put our stop loss above that high, and we would be targeting the next draw on liquidity, or that low, right? Now, if we continue off of this high and this draw on liquidity, so for example, what that would look like is something like this. Then from there, we would look for a fair value gap. Now, what is a fair value gap? A fair value gap is basically when price has an imbalance, right? So for example, what that would look like is, let's say there's an imbalance that is 3 candles. So for example, let me show you guys on a live actual chart. So for example, this would be a bearish fair value gap. There's one displacement candle there that has a gap within it. Notice the rest of these candles, how they have other candles next to it and it's just congested. And then there's fair value gaps, right? So basically all this is looked at as is for basically price to rebalance into that. So if we drop down lower, we're expecting price to rebalance into that fair value gap to continue going lower, or inverse that fair value gap and then to go higher. Now, depending on what scenario you're looking at, you want to pair these things together. So in this case scenario, for example, since we are bearish, right? Price meets that draw on liquidity there. We then sell off, we create the fair value gap, we come back into that fair value gap. Then from there, we are looking for price to continue lower off of that fair value gap, right? Because imagine, let's put this in a scenario where you guys can understand. Imagine with that amount of displacement where there's a lot of, basically a big gap, right? Imagine that as there's so many orders and short orders here that didn't get filled. So in order for them to get filled, price has to come back up to that fair value gap to then go lower, right? Because the orders are essentially getting filled in that fair value gap. That's the thought process and overall thought process. So, right, in terms of when we think price is going to continue, so let's say, for example, wait, Salman, this is a draw on liquidity here, isn't it? Yes, but what did we end up doing? What did we end up doing? We ended up continuing lower. So we're looking for a rebalance into that fair value gap to then drive price even lower. So we're waiting, price comes back up into that fair value gap, right? So if I outline it right here, that fair value gap, their price lines up with that fair value gap, and then we sell off of that fair value gap. So for example, you would look for entries somewhere around here. After we see we respected that fair value gap, we would put our stop loss above that fair value gap, the wick high of the fair value gap, and then we would be targeting the first low there, right? So that most recent low. And as you can notice, price fell perfectly to that draw on liquidity, right? Or that internal low, right? So that's the overall thought process, is either we reverse or continue off of draws on liquidity. So for example, we came up into this draw on liquidity, price then sweeps it. Now we looked like we want to continue off of it, but you got to be patient in these general ranges to see what price wants to do. Because either we run up higher and we have a nice candle close above this draw on liquidity to then see continuation, or we sweep that draw on liquidity and then we start selling off. So what that would look like and where shorts would come into play is somewhere here, because we're always not going to respect fair value gaps. So for example, right here, this is a fair value gap, right? There's your fair value gap. Well, Salman, I thought we were supposed to look at them as long or short, right? Like I thought we were supposed to go long off this fair value gap. Well, the thing is, not every fair value gap gets respected. So essentially, what you have to do between 9:30 and 11 a.m. or 9:30 or 9:30 to 10:30 a.m., you want to see the respect or disrespect of fair value gaps after we have swept a draw on liquidity, so a high or a low. So for example, we swept the draw on liquidity here. Price runs up higher. There's the fair value gap. Okay, well, which of the two scenarios are going to play out? Are we disrespecting it fully and then are we selling off? Or, right, are we respecting that fair value gap to then continue price? Now, whatever the two happens, we're just simply waiting and being patient for one or the two to happen. Once one of the two has happened, then from there, we are looking to base our entries long or short off of them. So for example, we're waiting. Okay, well, what does that tell you? Okay, well, that fair value gap just completely got failed. So I think price is going to go lower. So I'm going to enter my short position. I'm going to put my stops above where we had that draw on liquidity. I'll be risking 1 mini or $470 on this trade. And my take profit will be that low, right? There, right? That draw on liquidity there. In this case scenario, realistically, me personally, I'll put my stop loss like right there. Or you can even put it above that displacement candle. So you're risking roughly $235 to make $380. Now we're banking and our strategy should have around a 60 to 70% win rate. So as long as we are targeting equal amounts as we're making, we should make money over a long time horizon. Because if, for example, I risk $1, right, and I make back $1, but I win 60 to 70% of the times, then over time I'm gonna make more money positively, right? So I'm risking $235, and I'm going short on the market to target $380, or that's basically the money that will be in my account. So let's see if this plays out. Beautiful, that runs lower. We are consolidating, we're waiting. We're waiting. There we go. Then price meets our take profit or the draw on liquidity there, right? So what that looked like is price swept this internal draw on liquidity. We then displaced, failing and disrespecting that fair value gap. And then we displace lower. We rebalance back up into this bearish fair value gap. We respect it and we go lower. We come back up higher to fill the rest of the fair value gap, which is okay because where our stop losses is basically above that candle to make sure that we can factor in a rebalance. And then price sells off and then meets the next draw on liquidity. So we're looking at, obviously this isn't actual context because this is before the New York AM session starts, but it's just kind of like overall context of how it looks and how it looks in real time. So for example, today, what today would look like is if I go back to today's price action, let's go to around 9:30. So at 9:30, we have our two draws on liquidity. Here, we have this high, and we have this low here. Great. Now we are essentially just waiting for one of these draws on liquidity to get hit. Once the draws on liquidity get hit, we either want to look for a continuation or a reversal off of these draws on liquidity. So we're waiting. Still nothing. Okay, well, we're approaching this draw on liquidity, so we're waiting. Okay, well, we swept that draw on liquidity. Does that mean to immediately go short? No, because the next candle can just go up and start continuing higher. So how do we know that this draw on liquidity is going to actually work to reverse price? Well, what can you notice here? What is this? Well, there's a little fair value gap right there. Here. Great. So since we swept this draw on liquidity, I want to look at this fair value gap. Are we going lower or higher off of this fair value gap? So are we respecting this fair value gap and then running higher? Or are we running this fair value gap to then go lower? Which of the two is happening? So I'm basically just being patient and I'm waiting for one of the two scenarios to happen. So we swept that draw. There's still nothing yet. There we go. So we failed that draw on liquidity. We had a lot of displacement. There's a lot of sellers there. So now I'm going to enter my short. I'm going to put my stop loss above that draw on liquidity, or sorry, I'm going to put my stop loss above that candle that just recently displaced like that, and I'll be targeting the next draw on liquidity there, right? Oops, I don't know why this keeps bugging out. Stop loss there, take profit there, beautiful. Okay, well, it should just go fuck myself. Holy shit. TradingView is bugging. All right, yeah, okay. But anyways, what that would look like is stop loss there, stop loss, yeah, there, take profit there, right? So we're targeting that draw on liquidity there, and we're looking for price to run lower. There we go. Price hits our take profit, and we make $600 or $700. $600 or $700. So we swept that draw on liquidity there. We swept it, right? There's a draw. We then run down lower. We displace lower off that fair value gap, and then we continue lower to the draw on liquidity there. Great, right? That's it. And we are looking for this to happen almost every single day. And it basically does, right? If I go to yesterday, Wednesday, let's go to 9:30 to 11 o'clock. So what do we have here? Let's go on a higher time frame. Let's go on the 5-minute. Move my big ass head out the way. So what do we have here? Well, there's a draw on liquidity here at 4:05 a.m. We're looking at this high, and this is the high that I meant to draw out. Here. We're looking at this draw on liquidity here, because that's the highest high of this general range we're in. In this general pocket window that we're in, from the last day and current day, there's the high right there. Great. So, there's the high. Now dropping down in a lower time frame, let's look at what happens between 9:30. All right. So, select bar. So, for example, we have this low here at 9:30 that we made, and then we have that high up there. Great. So we're waiting for whatever one gets hit first. And whatever one gets hit first, we're looking for a continuation or reversal off of. So we're patiently waiting. Nothing yet, nothing yet, nothing yet, nothing yet. Boom, there we go. There, our draw on liquidity gets swept right there. Now great, since our draw on liquidity got swept now, we're either looking for what? One or two scenarios. We're either looking for a reversal off this draw on liquidity for price to go higher, or we're looking for a continuation through this draw on liquidity for price to go lower. Which of the two is happening? Once we see what is happening, then from there we base and take our trade off of that. So let's look. Nothing yet. Okay, well there's an upwards candle. I'm waiting. Waiting. Okay, well it seems to me price wants to reverse off this draw on liquidity. So I'm going to go long here. I'm going to put my stop loss below where we swept that low, so I'll be risking $625. And since we made a new draw on liquidity, or this high here, I will be targeting that high. This is the high I want. So we'll make $1,000, and we risk $600 to make $1,000. Right? So we're waiting. Wow. Okay, I just made $1,000. I move on with my day, and that's it. I don't go trade after 9:30 to 10:30. I don't look for more trades. I don't look for anything. I took my one trade for the day, I step away, and that's it. That's all I do, and that's how I make my money. And I show up tomorrow, I do the same thing, show up the next day, do the same thing. Some days I'll lose money, and there's nothing wrong with that, right? Because I know I'll make money the following day, or maybe not the next day, but the day after that, or the day after that, right? So this is how trading looks like, and this is how profitable day trading looks like. So you map out your draws on liquidity, you wait for a reversal or continuation off of them. Once you have certain things telling you price wants to go higher or lower off of those draws on liquidity, then from there, you enter your position, you put your risk on the table, you target your whatever points, and then you make your money. That's truly how simple trading is, right? You don't need to overcomplicate it. You don't need to do more than that. And that's literally my strategy. That's how simple it is. Now, obviously, I haven't explained every single part of my strategy because that's basically what my Discord is for, where I host daily group calls and I cover everyone's trade. I basically hold your entire hand throughout trying to become a profitable day trader. But that pretty much sums up kind of like the baseline of how my strategy works. Now, there's a bunch of different more advanced things that I teach in my Discord, and there's a bunch of different tweaks. But in terms of a baseline fundamental, that is pretty much it. Now, jumping into the ways in which you get the accounts and how you should go about it from here. All right, now that we have all the strategy and everything down, how are you going to go about getting a funded account? So this is the website. It's called topstep.com. Basically, you just click on TopStep. It's going to prompt you to this page, become a futures trader, earn funding, all that good stuff. So basically, you click earn funding, right? It then takes you to the TopStep dashboard where you have to basically create an account. I already have an account, so I'm going to jump on and show you guys what everything looks like. But essentially, you just make an account, simple as that. Make an email, password, all that good stuff. Now, you do need to be 18 years or older to be able to make an account with them and get paid out by them. Now, there's a couple things and ways around this. I don't suggest doing this, and I'm not legally liable for any of this, but you can trade under your parents' information. That's what I did when I was under 18. I trade under my mom's information, so her social and like all that stuff. But if you're not 18 yet, you can just paper trade and focus on the actual skill until you turn 18. Now, it's very easy to convince your parents. You can just show them on YouTube a bunch of young people doing it and how they're making money. The way that I convinced my parents was just basically annoying the shit out of them up until they were like, all right, Salomon, I guess I'll give you my information to be able to trade these accounts. But let's say, hypothetically speaking, your parents are just not budging and you're under 18. The ways in which you can get around it is, or not really get around it, but I mean, I guess the only way really around it is by getting your parents' info. And if you can't, then what I would just do and what I would suggest if I were you is just paper trading in the meantime. Just beg the shit out of your parents, bro, and you could realistically get it. And then just show them results and proof. Like you guys can go to my YouTube and just literally watch and have them watch a bunch of student interviews and just be like, look, Salomon taught all these people how to become profitable and they're all young and stupid and they're just gooners and they do nothing all day, but they're making a bunch of money, right? So once you've made your account, great. Now what do we do? So I'm going to switch onto my account. I'm going to log into my account and show you guys how everything works. So now that you have logged in, what you're going to want to do is at the top right, it's going to say start a trading combine. All you do is click this button. Once you have clicked this button, from there, essentially, literally all you do is you're prompted with three options, right? It's either 50K, 100K, or 150K account. Now, the only reason why that they offer these different accounts is because you have more drawdown. So what does drawdown mean as a whole, and why is it even important to you? So basically, the maximum you can lose on this $50,000 account before it's blown and you have to try again and pay the $50 fee again is $2,000. So basically, on this 50K account, if you get to the balance to 48,000, then from there, what ends up happening is you have to go back on to TopStep and purchase a new account. And basically, the profit target on this account is $3,000. So for example, you purchase this account, you start trading it. If you get to $3,000, right, in the account balance, great, you've passed that account and you've proved to this company TopStep that you now can get an account where you can actually start making money on. But if you get $2,000 of losses, right, and your account balance is $48,000, then you've basically blown the account and you have to try again and pay this $49 fee again, right? So it's the same thought process with the 100K account. So it's $99 to try the evaluation and the fee to basically try the account. And you have a $6,000 profit target. So you have to make $6,000 fake money or simulated capital on this assessment or evaluation account to be able to pass it to start making money. But the nice part with this is you get more drawdown. So you get $3,000 instead of $2,000 maximum loss. So basically, if instead of 100K, this gets down to $97,000, the maximum loss limit, then you blow the account and you have to do it again. Same thing with 150K, you have to make $9,000 to pass this account, but you get $4,500 in drawdown. Now, what I recommend for all of you guys is a 50K account. Best starting off, cheapest, it's only 49 bucks. And that's as simple as it is. That's the way that it works. So once you either make the money on the account, then they put you on an actual account that can actually make you money. Now, once you've passed the account, right? Let's say you've made the $3,000, you pass the account, you then have to pay a $150 activation fee. So what this even means and what this looks like is you basically pay the $150 because you're paying to activate the account to get onto the account that actually makes you money now, right? So now the money that you make, so let's say you make $1,000 on the actual account, you pay the $150 fee, you're not trading that account. Then from there, right, what ends up happening is once you follow their rules in terms of how many rules that they have, all you do is, like, let's say you're eligible for a payout, you click on the payouts and you go request your payout. Now, what the rules are for TopStep specifically is basically you need 5 minimum days, right, of $150 of profit, and then you could request half of the balance. So for example, let's say you pass your 50K account. What do you do from there, right? Let's say you make $150 every single day for 5 days, right? Not every single day, every other day, let's just say. But you just need $150 and you need to make $150 minimum for 5 days. So let's do the math. Let's say $150 times 5 days would be $750. From there, you can request 50% of your account balance, or how much is in profit at least. You can't request off of the whole 50K balance, obviously, but you can request however much you're in profit. So if you're up $750 after the 5 days, you've made $150, right? You then divide that by 2, so you got a $375 payout, and that payout is real money in your bank account, right? That you could request to your actual bank account. So you've passed the evaluation, you then pay the $150, you get the minimum days, right? And you can even make more than that. The minimum is $150 for 5 days, but you can make $1,000 for 5 days. And if you make $1,000 for 5 days, right, that means your account balance is $5,000. You divide that by 2. That means you can request a $2,500 payout. Now, the nice part with these funded firms is you can copy trade accounts. So, for example, what that looks like is you could buy 5 accounts at once. So, you could buy 5 50K accounts, and let's say you pass them, you start making money. If you now make $500 on that account, but you're trading 5 accounts and you're trading them at the same time, now you just made $2,500. And let's say your P&L is only $500, right? $500 times 5 days. So you got the 5 days of $500 is $2,500. That's on one account. But let's say you have 5 accounts. How much money would that be? That would be $12,500. And then let's divide that balance by 2 because that's how much you can request at once in the 5-day duration. Then you've made $6,250 in your bank account by just making those $500 days, right? So this is how the accounts work. Now I'm going to actually jump onto my platform because I have 5 past accounts, which are called express accounts. I actually have 5 with this firm right now. So I'll basically show you what the platform looks like and how you trade off of the platform and all that good stuff. Okay, so this is now the platform. Once you purchase the account, where do you go? So all you go is topstepx.com. So you search up topstepx.com, the same login you used for the original part of the TopStep dashboard. All you do is basically go to topstep.com, and then it prompts you with everything on the screen that you're seeing right now. So you're seeing the chart, you're seeing how to trade and everything. All you do to actually place an order is right click on your mouse, and then you could put your limit orders. So what a limit orders basically means is, for example, if I want to enter longs, right? I want to go and I want to buy the market because I think the price of the market is going to go up. I would basically press limit buy, and I would put my limit somewhere. Let's say I want to enter at 574 because I think price is going to come down to 574 to then go up higher. So basically, I would put out my projection, right? 574. I would put my stop loss, let's say below that low, and I would put my limit order right there, right? I would put my limit order at 574, and I would be targeting that high right there, right? At 582. I would be targeting because I think price is, let's say, going to go up. Obviously, right now it's the overnight session. I wouldn't actually be trading, but I'm just saying, hypothetically speaking, like for the New York AM session, what is that going to look like, right? So let's say 574. I entered 574. I'll put my limits out. So what that looks like, I'll put a fake execution, or like I won't actually put the execution out, but let's just say we got our limit order. We would set it there, and then we would put our stop loss there, and then we would put our take profit there. So basically how that would look is just like I would get entered into the position, and then I would put where I want to sell, right? Like, because I think the take profit's basically going to go there. All I would do is right click and I would put limit sell. So it would sell, right? It would sell my long position right there. And it's the exact same thing. Let me move my big ass head out the way 1 second. It's the exact same thing for shorts as well, right? So for example, if I want to short the market because I think the market's going to go lower, right? I would put out my short position. I would say, okay, let me think. I think price is going to meet this draw on liquidity here, right? And I think after we meet that draw on liquidity, we're going to go lower. So what I would do is I would put limit sell. I would put 1 right there because I think price is going to come tap my limit order. And then once it taps, it fills me into the actual position where I'm actually in the markets now. And let's say I would put my stop buy position, which basically means like I get out of the markets on my short orders, right? So this would be my stop loss. And then I would put my take profit, let's say at this low here. So I'd put my limit buy order there. Let me close this before it actually fills me into a position. But that would be my take profit, my stop loss, and then my entry, right? So that's how that works in terms of orders and how you actually place orders. Make sure all those orders are canceled so I don't forget. Basically, what everything means on the screen right now, you're probably asking yourself, bro, there's so much shit going on the screen. How do I navigate all around? So this top left bar is all of your accounts. All of your accounts right now. I don't want to click on it because then it'll show my account numbers and everything, and I don't want you guys to have my account numbers. But then this, where it says leader +4, means how many accounts you're copy trading. So for example, I'm copy trading 5 50K accounts right now. So if I make $1,000 on one account, then it copy trades that onto 4 other accounts. So then I make $5,000, right? This is the balance, which I've just blocked out. This is the maximum loss limit. So basically, maximum loss limit, all that means is how much you can lose in one day, which is $2,000, like I mentioned earlier on the top step dashboard. This basically is your realized day P&L. So let's say you're up $500 on the day. It will tell you that right here. And this is your unrealized P&L. So for example, if you're in a position and you're still in it, and let's say you're down $100 in the position, but you're still in it, it will say minus or plus $100 right here. So that's all that those numbers mean. It's not really confusing or anything. That's how you place the orders and everything. And that's basically all that you need now to really understand everything. So at the top left here, it's going to say 50K combine because that's your evaluation. And then it's also going to say 50K express if you pass the accounts and you now have accounts that can actually make you money. So I have 5 accounts right now that can actually make me money when I trade. And I just need to get the 5 days and then I can go request a payout, right? So that's the way that I personally trade and that's how I do it, right? So that's basically everything for the dashboard in terms of how everything works. Now I want to jump into contract sizing. You're like, okay, well, how do I know which numbers to actually trade and how do I know how much to risk, what my contract sizing should be, and all that good stuff? So what we're going to want to do in the start, in the beginning, is on NQ, for example, for every dollar of movement on NQ, one contract equals $20 of P&L. So for example, if I were to go long at 573, right? So if I went long at 573, because price is now up $1 from my entry, that would mean I'm up $20 right there. I would be up $20 on this position right now. For example, if I entered 573, well, now it's up 250. So that means times $20 because for every dollar, right, it basically, NQ moves, I'm up $20. So if it goes up $3, now I'm up 20, 40, 60. If it goes up $10, now I'm up $200 because it's times 20, right? Now, stop loss wise, how do we calculate stop loss? So for NQ moves $20 per dollar, right? Like in our P&L and our account balance. So for example, if my stop loss was at 571, that means I would be risking $2, right? Times $20 because that's how much per contract price moves. So that would mean I would be risking roughly $40, right? Because it's 20 times 2. And I mean, let's say I'm targeting $30, right? For every contract on NQ I'm trading, if I'm targeting $30, let's say I went long right there, my stop's there, and my take profit's at $30, or 30 points, that's what they call it. That's the word and terminology. You could just call it $30 on NQ. Then that would mean I would make $600 for every contract that I traded. So let's say I traded 5 contracts on this position. I had a stop loss of $2. That would mean basically I have a $100 stop loss. And if my take profit was 30 points and I was trading 5 contracts, that means I would make $3,000, right? Now the math behind that is because we know one contract on NQ moves $20. So if you're trading multiple contracts, then you just multiply the amount of contracts you're trading times, right? Obviously, how many dollars you're targeting and how many dollars you're targeting overall. So if you're targeting $30 and you're trading 5 contracts, that means for every dollar NQ moves, you're up or down $100. So if it goes up $30 and it hits your take profit, now you've just made $3,000. Obviously, you would not be actually trading 5 mini contracts. Even me being somewhat of a professional, not an actual professional, not because I know there's like legality issues and a bunch of different stuff and legal issues, but me basically knowing what I'm doing, I don't even trade 5 mini contracts. Typically, how many contracts I trade is 1 to 2 NQ mini contracts. Now, the contracts you are going to be trading in the start, because you want to risk as little as possible on the combine, starting off to just really understand what you're doing, is going to be MNQ. So MNQ is less than NQ. So instead of $20 per dollar, this only moves $2 per dollar, right? So it's less risk per contract by 10 times. Since MNQ per dollar only moves $2 and NQ per dollar moves $20, you're risking 10 times less per contract. So since you're starting off and you're a beginner, you want to essentially and basically you want to risk as little as possible, right? Now, the whole reason on why this is because of the fact that you want to basically know what you're doing when you start risking a lot of money. And when you don't know what you're doing, you don't want to be basically risking a lot of money. So contract sizing, what I recommend is on MNQ, like it's the same way and it moves exactly the same as NQ. It's just less risky, basically. That's all that it is. You want to be trading 5 to 7 MNQ contracts, right? Ideally, that's a good start and a good start baseline. And then once you start making more money, you start really understanding what you're doing, then you can move up to NQ. You know that meme where it's like the big leagues is calling? Like that's basically the big leagues will call once you kind of understand what you're doing with MNQ. So 5 to 7 MNQ contracts. This gives you the ability to actually make a lot of money. Like you can make hundreds and hundreds of dollars a day. But at the same time, when you're risking, right, you're not risking as much as you would on NQ. So 5 to 7 MNQ contracts. So basically the way that it works is 10 MNQ contracts equals 1 NQ contract. So if I trade 10 MNQ contracts, that is the same thing as me trading 1 NQ contract. Because the math behind everything is literally just, okay, $2 per dollar on MNQ, $20 per dollar on NQ. Like that's literally the difference. It's not that much and not crazy of a difference. That's literally as simple as it is. So that's how that works. That's how the contract sizing works. Now, how much should you be risking per trade and how many contract sizing you should trade? Obviously, I told you guys 5 to 7 MNQ contracts. And ideally, you want to be risking anywhere from $15 to $20 per position. And your take profit should be anywhere from $20 to $30 per position, right? Because the strategy that I just gave you guys has around a 50 to 70% win rate. So if you're risking equal amounts, you are guaranteed basically to make money over a long time horizon because it's basically a bunch of math that I don't want to explain because I don't want to sound like a geek right now, but that's basically as simple as it is. So we're going to be targeting basically anywhere from 20 to 15 to 20 to 25 points or dollars on MNQ to make 20 to 30 to $40 on NQ. Now, since the contracts are leveraged, that's not actual P&L. So for example, if I trade 5 MNQ contracts and I target $20 on MNQ, right? Let's do the math behind that. So we're trading 5 MNQ contracts, right? 5 MNQ contracts. Since MNQ moves $1 for every, right? For every dollar MNQ moves, the P&L fluctuation for your account is $2 since it's 2x leveraged, right? That would mean per dollar, since we're trading 5 contracts, would equal $10, right? It would be $10 of movement in our account balance. So if price went from 572 to 573 and we're up, that would mean we've made $10, right, on that position. Now, let's say we're targeting $30 on MNQ. So from 570, for example, 23,570 to, for example, 23,600, right? So 30 points or $30, we would basically times that by 30 points or $30. Now we've just made $300 on our account, right? If this math isn't mathing to you and it's just not making any sense, it's going one ear through the other, don't trip. You literally just have to experiment with everything to really understand the fluctuations. That's where paper trading will help a lot. So like my structure, my best piece of advice is don't buy an account immediately. Paper trade for your first week just to understand everything. Wake up at 9:30, trade from 9:30 to 10:30, understand what price is doing, trade 5 MNQ contracts on TradingView. So if we jump back onto TradingView, right, and we go on TradingView here, jump off, right, I can show you guys on a simulated account. So we've logged into our paper trading account. So now that we're on our paper trading account, we can kind of just mess around because we're not risking any real money. Oh, where'd my camera just go? Yeah, my camera just despawned. I don't know why. But anyways, we're back. Let me move my big ass head out the way. So now we would go to MNQ, right? Because that's the contracts we're going to be trading. It's the same as NQ, but it's less risky, right? So now how would this work? Well, this is not our actual strategy that we trade, but just for simplicity's sake, I'm going to just show you guys what it looks like. So for example, I would go sell 5 MNQ because I'm paper trading right now, because I'm getting on my TradingView chart. This is not a real account. So I would put my stop loss basically up here. So this means if my stop gets hit, I would lose $80, right? If my take profit gets hit, let's say I'm targeting this draw on liquidity, that means I would make $135, right? Now, explaining the math behind everything, let's pull up the math. So let's put our positions. So we're risking $8 on this position. So since it moves $10 per dollar, $8 on MQ means we're down $80 and we would lose $80 on this position. Now, where's the math for the take profit? So if we're targeting, let's just say 13 points for simplicity's sake, then that means, because it's times 10, because that's the amount of contracts we're trading, we would make $130 on this position. So as you can see, the PNL right here is actually fluctuating. We're up $27, $22, right? Obviously, this isn't a real position that I actually would take and trade because, number one, it's the overnight session. I don't ever trade the overnight session. But it's just a hypothetical scenario. Since we're on a paper account and none of this money is real, it doesn't matter if we lose or win this position because none of it's real. It's fake, right? But let's say I'm up $22 and then I'm like, okay, I'm going to close the position, and then I close the position. Great. Now I'm out of the position. I just made my $20, right? But since in the Asia session, there's not a lot of volume. There's not a lot of buyers and sellers in the market. The market moves really slow. In the New York AM session, it moves really fast, right? It's much more fast-paced. So you guys will understand all these things. And like I mentioned at the beginning, for the first week of you doing this, ideally, we want to go to paper trading and we want to make a paper trading account, because paper trading doesn't matter. You lose money. It's fake. We never even risked or invested any actual money. It's all fake and simulated, right? That's the way that we do it. And we want to do it starting off. So that's like calculations of everything. I know I sounded like a complete geek that entire time of explaining the numbers to you guys. And if you still don't get it, don't worry. Literally just jump on a paper trading account and just do the math in your head. And everything will start clicking after your first or second day of doing it. So you have literally nothing to worry about. All right. So now, critical step that I need all of you guys to pay attention to. Now you got all the basics done. You got the strategy done. You got how to buy an account. You got paper trading, the contract sizing, all that beautiful stuff. What the hell do you do from here? The next thing you're going to want to do in a critical step is going to be journal. Now, why do you need a journal and what is journaling? Journaling is basically you take a screenshot of your trade for the day and you explain why you took that trade. Now, the reason why you need to do this is because imagine you're studying for a test and then your teacher is like, where are your study notes? You get extra credit for your study notes. It's the same thing in trading, right? If you journal, you get extra credit, as in more money in your bank account to drag your nuts. This is a big man thing. You got to listen. So this is basically all you need to do, right? I'm going to show you guys exactly what that looks like. So for example, this is today's price action. This is how today moves. So let's say there's a draw on liquidity here, draw on liquidity here. We're looking at one of them to sweep for a continuation or reversal. Okay, we get a sweep there. We're then referring, okay, there's the fair value gap, right? We have the fair value gap there. Great. Beautiful. Now we're waiting for one to basically run above or below. Great. We're waiting. Okay, beautiful. It ran below. We're going to go long there. We're going to put our stop loss below that candle that ran it. We're going to go take profit above at the high. Great. And then price runs to our take profit. Great. Now that price has ran to our take profit, we put out where the chart was and everything. Okay, great. Now that the chart was like this, now all we're doing is we're going to click the text button. Let me move my big ass head out the way. We're going to put the text button. We're going to put text. I saw that price met the draw on liquidity, right? Okay, great. I saw that price met the draw on liquidity. Now, where did that happen? Price met the draw on liquidity there, right? Then from there, what did we see there? I saw that price ran the bearish, right, the downwards fair value gap, FVG. So I thought price was going to go higher, right? Great. Now that we've got that journaled out, okay, what's the next journal? Put that there. I targeted as my take profit that next draw on liquidity, right? Because that was my take profit. And then once you have these thought processes down, great. Now from there, what you want to journal is how you felt. I felt greed today because I wanted to make more money. Now, what's the overall solution to this? Solution is to target the first high and be okay with only targeting that high, because I know if I can consistently I probably butchered that spelling. Consistently make this amount a day, I will make a lot of money once I start copy trading, for example. Right? So there's the thought process, and then we would basically take a screenshot of this. Luckily, TradingView already has this naturally built in. So you would literally just go to take a snapshot, and then it saves it to your desktop or computer. Or you can do the same thing on your phone, and then just put these photos in the Notes app, and then target the date. Like, so for example, today was August 7th, 2025. Now, this is important. I know this is shit work. You don't want to do it because it's hard. Or not hard, but it's just like boring, lazy work. But I'm telling you how much this will serve you in the beginning. Like, there's a bunch of people that take a long time to get to profitability, and it's because they don't do this little shit. They're not willing to do this little stuff because they're like, I don't need to do it. It's fine. I'll figure it out without it. When I'm telling you this is mandatory and this will allow you to start making an actual living off this and a lot of money really fast, these are one of those things that will allow you to get there. So this is a non-negotiable, all 3 steps. Why did you enter the trade? What did it make sense? What didn't make sense? How did you feel? And why did you feel that way? Right? That's what we need to get done. That's how you'll become consistently profitable much, much faster than everyone else. This is how you'll start making money faster than everyone else. And this is how to properly do it, right? So from here, let me remove all drawings. Now, what's next? Well, let's jump into the last step in which you need to do daily. All right, so this is one of the last steps, and this is an extra, but it's still mandatory. This is how you are going to get better than everyone else, much faster than everyone else. If your whole goal is to become a profitable day trader as fast as physically possible, you basically need this platform. Now, it does cost like $30 a month, but you can just do like a new email 7-day free trial, and you could just keep running that, or you could just don't be stingy and go buy the account for $30. Either or, doesn't matter, bro. Whatever you want to do, it's your life. But anyways, what this is and what FX Replay is basically a platform that allows you to paper trade, but a lot of dates, and it's almost like it's real time. So basically how I showed you we can paper trade on the account, imagine you can do that every single day for however long you choose. So I'll show you guys exactly what this looks like. And it's simulated, right? There's not actual money getting invested into this, and there's not real money being at risk. So it allows you to trade, basically, without having to put in your actual money, and you can learn a lot about your system and all that good stuff. So how we would go is you would get and log in, you would buy the subscription or get on the trial, and then you would go to new session. Now you can name your session trading session for YouTube video. I'm just name it that. Now you would start the account balance at whatever account size you're trading the funded account with. So 50,000, right? And then assets, all you do is click NQ. Now, I think if you're on the trial, it doesn't allow you to do NQ. You can do NAS 100 though. That's the exact same thing. So you can do one or the other. So NQ, beautiful. And you could do start date. So what this means is basically how far back do you want to go in price action? So ideally we want to do like this year's price action, maybe last year's price action is okay, but everything after that, or sorry, before that I meant to say, it's not as applicable. So we would go to like, let's say we want to do July of this year. Great. So we would do July, and then we would put the end date to the end of July. We would create the session. Great. So now we're on NQ, right? So we're going to remove everything, remove all drawings, remove all indicators, get all that bullshit, all that guru shit off my screen. Thank you. All right. You press go to at top, right? You want to go to New York AM session. So this is at 9:30, right? Like I tell you guys want to be trading between 9:30. Make sure to do this too, because time is also important. You go to the time zone, and all you do is find New York. Where's New York? UTC4 New York, right? So great, 9:30 a.m. As you guys can see, there's the start of the market. So we're looking for our entries between 9:30 and 10:30, right? In that general pocket window. So where would our draws on liquidity be, right? And we're looking for continuations or reversals. So there's a draw on liquidity there, and there's a draw on liquidity there. Great. So now we are waiting essentially for one of the two to get met. I like putting it in the 15-second time frame, right? Like just it's like how much the candles move and how fast per click. So if I click this, that candle just moved 15 seconds, right? So we're waiting basically patiently because you don't really want to trade at market open. There's a lot of volatility and a bunch of stuff happening at market open. I would say wait for the first like 5 to 10 minutes of the market, right? So we're waiting. Okay, well, there's another draw on liquidity that got met there, right? So there's a draw on liquidity there that got met. Great. So where would we refer to? Well, there was that little fair value gap there. If we close below it, maybe we can find a short position. That doesn't look pretty good. We're still waiting patiently. There's nothing really on this chart right now that we're looking at. Okay. So we're waiting to either price run lower or run higher for our continuation or reversal. What are the two is happening? We're waiting. Okay, it looks like price wants to continue. So I'm going to enter my position with one mini contract, right? I'm going to put my stop loss. The way you do it is you just click on the protect position. You put your stop loss out. Just click one tick. And then you could drag this wherever. So like you would drag it there, for example. That means I would be risking $365. And let's say the take profits, that next draw on liquidity there at 717. Right? So we would put out our take profit. Put one tick. And we would drag it to the next draw on liquidity. So we're looking for continuation because that draw on liquidity failed to run lower, which means price is more than likely going to go higher, right? So we're waiting. There we go. Take profit hit. In the span of literally 15 seconds, our take profit got hit. Great. Now we would go to the next day. So all you do is go to, right? And then you would go to the next New York AM session open. So same thing, right? Thought process. Okay, this is 9:30. There's a draw on liquidity there that we met. Let's go on a higher time frame. Let's look at the 15-minute time frame. Okay, well, we're at all-time highs in the market. So what do we do since there's no other draws on liquidity higher? That's for another video. That's much more complex, but we can just look at what the chart's doing on the low time frame. So 1 minute. So we're waiting. Okay, it looks like we want to continue because we're displacing above, but let's wait a little bit longer. Let's wait for some more structure to get built. So what that means is we're waiting basically for price to tell us what it wants to do. Right, so we're waiting. Okay, this looks pretty bearish because yes, we met the draw on liquidity, but this fair value gap right here is getting inversed, right? So we're waiting. Okay, so we just fully rebalanced into this fair value gap. If we want to go lower, we should see the next candles start to go lower and displace lower, and then I'll go ahead and enter my short position. Okay, it looks like price wants to go higher, so this looks good for a long. So I'm going to enter long here. My overall thought process, I'm going to put my my stops below where we just made that wick. And I think price is going to meet that draw on liquidity at 985. Right? So that's my take profit. So let's see if this gets met or stop loss gets hit. Great. So take profit got hit. If this position actually was real, since it's obviously not real, it's simulated, I would be up $600 on this position. And my stop loss would have, the stop loss got hit, I would have lost $500. But since the model has a very high win rate that I've given you guys for completely free, you guys will be able to cook with this one. So $600, great. Exit the position, save. There you go. Now this, and the only reason why you do this is imagine it's like studying for a test, right? Your test is the actual markets with your actual account that you paid money for, that you're trying to make real money off of. This is just studying, right? Like it's like, okay, if I get the study quiz wrong, it's not like I'm going to fail the test, but if I get the study quiz wrong, then that means I need to work harder and work even more harder because I'm getting the study quiz, or what do they call it? Bro, I haven't been in school for so long. What do they call it? Study quiz? Quizlet? Fucking hell, bro. I don't even remember. But anyways, it's basically just studying. Just think of this and FX replay as studying. Now it tells you all the analytics, so we can go to analytics. Okay, so I made $865 in 2 trades. I had a 100% win rate. I took 2 total trades. And these are all the metrics that we could look at, and we could say, okay, I want to optimize these metrics. I want to do better. Obviously, I couldn't have done better because I just have the biggest nutsack on the face of the planet Earth, and I'm just a G. But it's like, let's say this number is 70% or 60% or 50%. It's like, okay, how do I get to 60%? Okay, I need to do more. Where am I fucking up? Why am I fucking up? Right? These are all the questions you need to ask yourself to then be able to get to the next stage and start doing much better. But anyways, that's it for all the things I wanted to teach you guys on a technical basis, strategy-wise, contract sizing-wise, all the things day-to-day you need to be doing. Now, I'm going to tell you guys routine-wise what I want you guys to be able to do, and we'll jump on a full screen for that. So great, we've gotten all the steps done. You now know exactly what you need to be doing every day. You know how to get started. You know how much to risk, contract sizing-wise. You know where to get your account. You got everything you need. What's next, and what do you do from here, basically? So you want to apply everything into a day-to-day routine. Now, the easiest way to do this is just asking yourself overall. It's like, okay, Well, what time do I wake up, right? You got to wake up 30 minutes before market open. So calculate, however, if you're not in New York or you're not on the East Coast, ask yourself when 9:30 EST is to your local time. I'm in California, so for example, market open for me is 6:30, which means I'm up at 6 a.m. to be able to look at the markets. 30 minutes to analyze overall what's happening, where the draws on liquidity, all that good stuff, right? So that's what you need starting off, right? And then you take your trade, you take your journal, right? You screenshot the chart, you write out everything you need based off the strategy, how you felt, all that good stuff. Go upon your life, go do something productive, or like if you have to go to school, if you have to go to work, or if you don't have any of those things and you're unemployed and you're unemployed, go to the gym, do something productive after that, reset your mind after you took your trade. You want to take one trade a day, no more. It's not a negotiable. Top Step, the platform that I just showed you, if you go into the settings, you can limit it, right? It's called the auto lockout rule. So it maximum sets it to where you can only take one trade per day, right? So no more than one trade per day. And I would immediately do that if I were you guys. Like non-negotiable, mandatory, one trade a day, because at the beginning, you don't know how you are going to act emotional wise. You're not going to know if you're going to go on tilt, if you're going to blow the account in one trade because you're just spamming buttons and you're all over the place. So the way you protect yourself from that is just set one trade a day rule. So then you're like chilling. It's like, okay, if I take this loss for a couple $100, I'm auto locked out for the rest of the day and I come back tomorrow with a fresh mind, right? That's the way that you combat that. So you go to the gym, you come home, or you go to work, you go to school, you come back home, start backtesting. I personally recommend my Discord members to do backtesting for 1 hour and do 3 sets of that. So, for example, you get home from work, school, or the gym, you do an hour of backtesting, you then go chill, go scroll TikTok, whatever, just live your life. Come back an hour later or 2 hours later, do another session of 30 minutes to an hour. Same thing, go back, chill, relax, whatever, and then do another session of 30 minutes to an hour. Like that's the overall thought process of how much you should be doing this shit. And then every night, review your journal, understand what you felt, why you traded overall, what was the thought process, why did you do certain things. All of these things will just overall benefit you and help you. Now, expectations wise, how long should it take you to make money? Now, what I can tell you guys is, look, there's so many things that are variable and dependent. If you have no money right now, you're trying to make it out with trading and you're on your last 100, it's going to take you much longer if you're not willing to get a job. My best piece of advice to you guys is go get a job, start earning baseline income, a couple $1,000 a month, right? Apply that to trading, buy accounts, keep showing up. I'm not preaching to you guys like all these other gurus, bro. You're not going to just immediately get it and just start making a bunch of money, right? It's very rare, even in my Discord, for people that I give mentorship to, right? Like people I'm teaching actively every day. It doesn't even take them that short of time of like, oh, they just immediately started and they started making a bunch of money. There's only been like 3 people that were like that. The realistic setting is like, hey, you're going to fuck up. You're going to blow accounts. You're not going to really know what you're doing for the first couple of months. You're not going to really get it. And then after that, maybe first couple of months, 3 to 6 to 9 to 12 months. Then from there, you start making money consistently. You start making $1,000, $2,000, $3,000 a month. Okay, I know what I'm doing. I know how to navigate. Now I'm going to start copy trading. So now that same $1,000, $2,000, $3,000 you're making a month, you times that by 5 accounts or 3 accounts or 2 accounts, however much you want to copy trade. It's a preference thing. It's not mandatory. You don't have to do it a certain way. So let's say you go from 1 account to 5 account, you're making $2,000 a month. Great. You multiply that by 5 because you have 5 accounts now. Great. Now you're making 10K a month, right? You got a real amount of money coming in, right? And then you start making a lot of money. You keep scaling. And by then you'll know exactly what to do and how to do it. And what I can recommend you guys, if you guys really want change as fast as physically possible, you want to grow as fast as possible, you want to make as much money as fast as physically possible, the way that you do that is getting a mentorship, right? I know a lot of you guys kind of have the thought process. You're like, I don't want to, like the core sellers, they're all dorks. I hate them. I had the same thought process. And that's the reason on why it took me 4.5 years to get good at trading, is because my ego was just inflated. And I just was like, bro, all these guys are liars. They don't know what they're doing. There's a lot of people who actually do know what they're doing and making a lot of money off this shit and also teach people. Like a lot of people ask me like, oh, Salman, you're making all this money off trading. Why do you have a Discord? It's like, guys, I can teach you guys, make you guys money, and make myself more money in the process of doing it. Like what? That is the most awesome job. I actually get a lot of fulfillment out of teaching people. You know, I mean, I love teaching people genuinely. So my Discord's there if you choose to get it or you not choose to get it. My life won't change at all. That's just how it is. But on a recommendation basis, 1,000,000%, if you want it to take as little as time as possible, I would 100% recommend getting a mentor. Now, what I said, yes, is true. There's a lot of people who make money off trading who also are really good teachers. But with that, there's also a lot of people who are lying to you and basically just completely lying to you, and they make all their money off their course, and they're just looking for you to pay for their course, and they'll give you empty promises. So if it sounds too good to be true, like if someone's preaching to you, oh, I have a 100% win rate model, or hey guys, I have some secret indicator, or I have a secret meme coin, or I have secret something, like if they're trying to market too heavy, then that means more than likely or not they're just lying to you in your face, and you're gonna get scammed, right? So to save yourself that mental headache of having to go through that, if it sounds realistic, like hey, for example, the way that I'm telling you guys, hey, it's not going to be instant. It's going to be a couple months to a year or 2 years of you trying every day, and it's going to take you a while. But if you have a mentor behind you, it'll speed up the process. That's a little bit more realistic. It's like, okay, someone that makes money off this is going to teach me how to do it. And I have countless testimonials, bro. You guys can go through my YouTube channel. You guys can see all the members that have gotten paid out. You guys can see all the interviews I've done with students. Some of them are at 20, 30, 40K a month. You guys can go watch that. It's on my YouTube channel. You guys can go find them. But that's expectation-wise. In terms of thought process, mentality-wise, bro, you guys are all capable of doing this. Every single one of you guys are capable 1,000,000% of making a lot of money off trading. The question is when it gets hard, are you still willing to put in the amount of work you know you should be doing every day? That's the question you all need to ask yourself. If you aren't willing to work so hard, even in the routes in which you don't feel like doing it, there's going to be that day, bro. There's going to be that day where it's much easier to go to your homie's house than it is to backtest or journal or forward test. There's going to be days in which you don't feel like doing it because you blew an account and you're like, oh, fuck this shit, bro. I'm going to just lay in bed. I feel like shit. I don't want to do any of this. There's going to be those days. You got to prepare for the bad days, right? The question is are you willing to still try your best on those days in which you don't feel like doing it? If the answer is yes to that question, you will most definitely make it, right? It's just a matter of a time basis, right? So if you can go in with the expectation of saying to yourself, all right, I'm not going to limit myself to a time basis. Like I'm not going to say I need to become profitable by next month. I'm going to just go in and say, yo, this might take me 3, 6, 9, 12, 24 months. However many months it takes me, that's because God wanted me to go down that route. And I'm okay with whatever happens. And I will continue working harder than everyone else. I'll continue beating everyone else, and I'll join a mentorship and learn from people who really know what they're talking about, who can show me student results and that I actually like. And I'm going to try my best every day. I'm going to apply myself every day. I'm going to do everything necessary in order to win. Another thing I'll tell you guys is don't join a signal group, right? It might seem in your head like, oh, wow, like I can just take this guy's signals and start making money off trading. Trust me, majority of them are a scam. Right? The majority of them are a scam. You don't want to learn. You're not even learning anything because you're just a robot. You're like clicking a button because someone else is telling you to click a button. But that's not trading, right? That's not how you build a career in trading. Because God forbid, let's say that person dies that you're taking signals from. Or God forbid that person's dingling falls off and then he has no dingling. And then you're sitting there and you're like, oh, well, he has no dingling now. How am I supposed to get my signals from him? So just simplicity's sake, bro, majority of signals are scam. Do not join a signals group. Do not be a signal robot. Majority of people that are signal robots, yeah, sure, maybe they'll make a little bit of money at the beginning, but what happens when their signal group stops, right? What happens when their mentor stops showing them signals and giving them signals and feeding them signals? Instead, you want to join a mentorship from people that can actually teach you the skill set. This will allow you to progress much faster. Another thing I'll tell you guys is veer away from spending a lot of money on a mentorship. A mentorship should cost you no more than $100 to $500. Typically, mentors that charge thousands and thousands and thousands of dollars are typically mentors in which are just trying to sell you their course. You know what I mean? They're like sitting there and like, hey, I want to sell you my course, and that's how I make majority of my money. Not all of them, right? There's some guys in this trading space that sell really, really expensive courses, but they also make a lot of money at the same time. But for baseline fundamental and just starting off, you guys don't need to spend $3,000, $2,000, $4,000 on a course, right? Course should cost $100, $200, $300, $400, $500 a month, or $100 a month, $200 a month, whatever, right? It should be in the hundreds range though, where it's like, hey, even if I lose this money, it's not that serious, not that deep. But I'm telling you guys, if you guys do everything that I mentioned in this video, I'll be shocked if some of it, like if you guys made it to the end of this video, give yourself a pat on the back. Because I know damn well there's a lot of you guys that were just like, scrolling TikTok off the video. But yeah, man, I mean, if you guys made it to the end of this video, let me know in the comments. I gave you guys all this value and sauce for free. The least you can do for your dog is leave a like and a comment down below, and just say, like, if you like this video, if it helped you out a lot in any way, shape, or form, just leave a comment and be like, thank you, Salman, or some random stuff. I don't know. But anyways, y'all, I love you guys. If you guys end up deciding to join my Discord, you guys made the right decision. I'm going to get you guys so right. Yeah, man. I love y'all. If you guys need anything from me, my Instagram is the same as my YouTube channel name. It's just salmon.nasiri. So you guys can DM me on Instagram if you guys have questions. Um, yeah, man. I hope to see you guys in the Discord soon. I love you guys. If this video has helped you, let me know in the comments. See you guys in the next one. Peace.